Good evening, everyone. Now, as usual, we're going to start off the weekly market analysis by looking at the US index as per last week, what we have done. Okay, so we're going to look at the Dow. Last week, if you remember the video, I analyzed that the shooting star over here may lead to some pullback, and I expected a 2.2% pullback. Dow did went ahead and then went much lower. The good thing here is that it managed to hold at this support level and have a rebound over here. So today we want to see a higher closing to free up this gap. Okay, and if you can free up this gap, of course, the uptrend will continue. As of now, the future is red, so it may take a few days before it can go up to free up the gap. The most important thing is if there's some pullback tonight, the best is that it doesn't go lower than 34240. So let's look at S&P 500. We are looking at the pullback, similar pullback as mentioned last week. In fact, S&P 500 from the low of the candle last week has fallen by 2.8%, and it broke its support over here at 4117. The good thing is it managed to have a very strong fight back starting from last Thursday to Friday, where it had a fantastic closing. And the fight back actually closed up the gap over here, and that is a very optimistic closing, because once it free up the gap, most of the gap over here, it has a high chance to continue to move higher. Again, the futures is still slightly red. We want it to have a good close tonight, and the closing tonight hopefully not below 4152. The best is that it can close at 4192. Then the resistance to look out for is 4239. Nasdaq, we are looking at a very strong rebound on Friday, and of course this rebound gives a glimmer of hope, right? Why? Because first of all, it managed to create a support level here. As I mentioned last week, the Nasdaq is on a downtrend. Most of the tech counters are badly hit. It managed to hold at this low and form a support at 12966. And this rebound gives you a chance. Of course, if it can move up back to 13655, it can start to turn a trend. But of course, futures are red right now. Hopefully, it's a slight pullback. Pullback like something like this, and then rebound may be still happening going forward. So we are going to look at what is going to happen for the next few candles. Similarly to the Dow and the S&P 500, the levels to look out for, the best case scenario is, of course, if the Nasdaq can close above 13460. If the Nasdaq did not manage to close higher, we prefer it to close at somewhere 13309, and this gives a glimmer of hope that the next few days can continue to stay above this level, and a rebound will happen and break out above 13460. Then we may have a new trend well on the way, because we can see higher low if it can hold at this level, higher low, and then we can start a new higher high for the Nasdaq. Okay, so far so good. The market analysis that we have been looking at has been doing quite well for us. So let's continue to look at the Singapore market. Okay, so let's start off with this STI. Last week, I did mention that the STI is forming a topish pattern, and probably we are in the risk of breaking down. Okay, and the reason that was given was that if you observe, we see a lower high, And once it breaks the support at 3141, then we may see lower low, and indeed we had a breakdown, mainly also helped by the announcement of the new restriction where we can only mingle into in Singapore, and there's a host of a restriction, like for example, school enrichment class, and then school is going to shift to online learning. Okay, so today we have a lower opening, and I managed to have a good fight back. So this gives us a glimmer of hope as the index managed to hold at support level around here. Okay, so the gaps are all filled up, duly filled up, as all these gaps are meant to be filled. So the next thing to look out for is that whether we can hold above 3020 level to start a new trend. So it's very important for us to build a base here and then re-challenge the resistance at 3141 to help us to turn around from the current situations. Now, of course, one thing to note that we are going for restrictions from 16th of May for the normal restrictions where the social gathering is down to 2, and then everybody, those that can work from home has to work from home, etc., is till 13th of June. So if the situation don't turn around, I mean the COVID numbers don't goes down, and the extension of restriction were to be in place, then do watch for the index to have another severe correction like last Friday. We had a very, very severe downward movement. At one point of time, it was almost like 99 points or 100 points. It was very fearful. The whole market was in red, except Sheng Siong. Okay, the reason being is that Sheng Siong is the I think is the only local supermarket to be listed in exchange. The other one listed in the exchange is Dairy Farm, which is Giant. When I say only local, means that it is so-called controlled by Singaporeans, and to be more specific is that to differentiate these two counter is that we are looking at a much better fundamental for Sheng Siong as compared to Dairy Farm, which has a heavy debt. So Sheng Siong had a very strong up breakout and then move all the way up, and we'll take a look at the chart later. So what I was trying to say was that the whole market was so fearful that, you know, all across the board were selling down. Okay, all the tech counters, COVID related, non-COVID related, also had took some beating. Now, if we look at the banks, okay, so let's move on to the banks to see whether they can rebound, as such that if they rebound, the STI will rebound. So we see a hammer formed for DBS, very nice hammer, and the major resistance right now is around 29.94. DBS, good thing is managed to hold at the support level. If you fill at this hammer and close lower than 28.49, then we can expect more downward movement with the short-term projection to this level, around 27.60. If you are a fundamental trader or investor, the banks is actually our banks are actually very good in fundamental per se, and then this is where when you pull back to the low, for example 27.60 or lower, it's time for you to enter. But of course, for those who like to trade for short term, if there's a confirmation for this white hammer, if you like to see it go back up or right the way up to 29.94, you may look for some trading opportunity over at this range of stocks that is going to, over this range of trading. Okay, OCBC managed to recover today after it pulled back and tested the support at 11.55. A very good candle today, where you are looking at a glimmer of hope of potential rebound, and the resistance to look out for is 12.61. No doubt that today's candle doesn't form any bullish reversal candlestick pattern, but still a white candle still very much appreciated. So the next range of trading tomorrow is that if OCBC can go back to 11.97 and towards 12.14, close at 12.14, it may be a good sign for the index to move up. The bank to move up higher. UOB forms a nice doji at the support level over here, and we are looking at the white candle confirmation for rebound. Now, if you look at these three banks, seems like there is a chance for the three banks to rebound from the low. So the question here is where it is going to rebound. Now, the challenge is that, in my own opinion, I think it's very hard for the three banks to retest their highs for OCBC here. And of course, DBS is the nearest to the high, but there is still a challenge. So we have to look out for the next few days how it goes. So things to look out for is potential lower high, and then break low or break support. Then this may spell more downward movement. Last week I mentioned that the tech counters are very oversold. Okay, I mentioned about ISDN, Franken, AEM, UMS, Nanofirm. So Franken, I mentioned that there was a inverted hammer. So congratulations for those who have taken action, because I mentioned that it need a white candle confirmation, and it did form one. And today it actually rallied up strongly to burst past 149, and this helps the counter to make the first move to start a new trend, because the potential of lower high has reduced, as there are some sign of breaking out of resistance. So one thing that you may want to look out for in the stock market is that in a bullish market, support holds, resistance breaks. In the bearish market, support breaks, resistance hold. So we are looking at a breakout over here for Franken, and the next few days, very important, the pullback has to be higher. So like I say, in a bullish market, support hold. If there is any pullback, any profit taking, we want to see some light action over at this point of time, where be it light price action, a slight pullback, and volume as well. Then it forms a base over around this range and rebound and breakout. So let's do some illustration over here. So we pull back over and then break out, then we test a high again, and that forms an uptrend. Okay, so look out for that. Of course, now if you ask me, is this an opportunity for you to enter into Franken? I think it's about too late. If you have followed the video last week, yeah, that is a very good chance for you to get into Franken. Now it's just to wait for the next best opportunity. AEM, on the other hand, today just managed to rebound from the low and form a white candle confirmation for the hammer pattern over here. Now the good thing is that we are looking at a potential rebound because of the white candle closing, and the next is we needed to move all the way up to 361, and that will probably form a good base. And what we are looking for is some slight pullback and then rebound and break out, then we can start an uptrend. So if this really happened, then of course you can look for opportunity around here or around here. Okay, ultimately what we are looking for is that this counter if it's bullish, it should fill up the gap at 387 to 4.03. Of course, if you ask me whether the whole market is it very bullish or is it very fearful, I would say that the market is at its cross junction right now. Many are waiting for the next movement where many fear a correction is coming. Some are optimistic, especially the last Friday strong fight back from the Nasdaq. So let's go forward, look forward, and then see what's going to happen. For AEM, it's definitely bullish. UMS still is not out of the wood because it hasn't really come to its 139 level. At this point of time, there is still risk of a lower high if tomorrow it come back down to 131 and it even close lower at 129. And the worst scenario is that it comes to 126. Okay. Now, I'm not so worried about trading this, even if UMS forms a lower high by coming down to test 126 and even break down where it confirms the head and shoulder formation with this lower high. And even if it were to go all the way down to projected level back to where it was at 1 something, okay, 111 projected level, or even at $1, this would present a very good opportunity for you to grab some of these fundamentally strong tech counters, so that when they recover, you get to enjoy capital gain and as well dividend, because UMS are paying a dividend going forward as well. So there's a CD coming up, 1 cent CD coming up. Okay, just like to touch on ISDN. Next, ISDN didn't rebound as strong as Franken on UMS. It's more like an AEM where it is still struggling at the low. So the glimmer of hope is that today it formed a bullish harami, and we needed to close around 615 and above to stage a fight back. And this fight back should bring this counter to 65 so that it can start to turn a trend. Okay, so we shall see what's going to happen. And similarly, Nanofirm is also struggling at the low. And what we are looking at is that it also formed a bullish harami. In fact, this is a second bullish harami over here. This is a bullish harami coming with the hammer without a confirmation, and then it formed another bullish harami. It is a bullish formation. I remember last time I ever traded this counter FNN with a similar pattern, and it managed to recover strongly after that. So would it happen to Nanofirm? So if it's going to happen, first thing to look out for is this resistance at 4.93. So it got to go there. And if it can go there at 4.93, and if it can't break, it's fine, let it pull back slightly, then rebound and break it. Then we have a nice inverse head and shoulder formation. And then the projection level brings it to back to where it's supposed to be, which is around 5. I'm just imagining, imagining that it's going to form this pattern. So to anticipate, but going forward, it may not form this formation. But if it does, 5.15 maybe the next target. Eventually, it has to fill up this gap to make it exhaustive so that it has a chance to continue to go back up. So there are still chance for our tech counters to move up. So very importantly, we need to see it test its resistance and break out from it. A higher low is very much welcome, so that it tells us that there are enough strength garnered, and the future breakout would be more sustainable, suggesting that the uptrend is more sustainable, and we can see more upside for this counter. Okay, now let's move on to the gloves counter. Okay, so there's a little bit of mixed fortune for the gloves counter. First, we talk about MedTech, which is very strong, where it has moved up to test its resistance around 109, 108 to 109 level. Okay, and in fact, it has to break up from 110. The reason that I can think of for MedTech to be this strong is that there are rising cases in Taiwan. Not sure how Taiwan got these local cases transmitted out of control, but the market has anticipated that the demand for MedTech's equipment in Taiwan is going to go up. Ultimately, MedTech is a Taiwan company. And tomorrow we are going to look out for it to break up 110, which is to break up from this base. This is a very huge base that has been 1, 2, 3, 4, 5, 6, 7 months, almost 7 months. And we are looking at that discounted, if it can break up from this base, the next range of trading will be from this to here, which 150 has been very much anticipated since a very long time ago. And if you really be bullish for MedTech, we may see it go back to trade to that range. Okay, UG Healthcare and Riverstone is very similar, both tested resistance. The UG Healthcare tested resistance at 745, Riverstone tested resistance at 147. And if you look at the candles for UG Healthcare and Riverstone, UG Healthcare and Riverstone, both are telling you uncertainty, right? So this candle spells uncertainty, uncertain whether they should be going up, okay, especially at resistance level. So this comes to the next important candle to look out for. A black candle like this, previously it also had the similar candle with black candles, it led to a pullback. And if it happened again, it may pull back again. So similar to UG Healthcare, if you look at here. So this may be a challenge. For Top Gloves, it didn't bother to go up, so there's nothing to fear for now. In fact, it's still at the bottom. So it hasn't really broke out yet. But if you look at candle, scrutinizing the candle, you do see the lows are getting higher. So this may be a chance for, or maybe these are signs that we can look out for to tell us that maybe Top Gloves has a chance to move up eventually, trying to catch up its peers. So it must go above 174 in order to be bullish. Then, of course, if it can really break out with a strong volume, then we would welcome this counter at 195. Now let's move on to the next sector. We have SIA, a very strong rebound today, very good rebound rather. Next is to move forward to 480 level. Okay, so last week I mentioned that SIA is bearish and may move lower to retest support level at around 443. And indeed it tested and rebounded today. So today, very good closing. We would like it to continue by going to 481. The best scenario is that if we can go to 496, then we may see a potential sign of change in trend. Okay, so watch out for the next few days movement. So as of now, the trend is not changed yet. It's still very much in downtrend. So if anybody who have traded today, it's more like a counter trend trading, bottom fishing. SIA Engineering is also on downtrend. As I mentioned last week, the downtrend may lead it to go down lower. In fact, it has gone down so low that it has retest is 201 support level. All the support level that is plotted are plotted here has been tested, and today is a very good rebound. A glimmer of hope, still similar to SIA. SIA Engineering is also very much in the downtrend. We liked it to go 218 or to even 227 in order to be bullish. Sets also in a downtrend as I anticipated last week, all moving down to that support level as anticipated. Now today we had a very good rebound, so hopefully you can build on that to go to 391 or even 402. It's very important for you to go 391 or 402. In fact, 402 is very much welcome. Why? Because if you zoom out, you can see a huge double top pattern, and will get this double top pattern, this very huge one over here. Wow. Okay, so if sets can get this double top, so it should trade above 402 going forward, and then it needs to go to 422 over here. Okay, so how does it go there? Of course, to go out one straight line V-shaped recovery is a dream. Okay, but if it doesn't, so a good rebound, go back, break out a higher low, that will build more confident that the change of trend has taken place, and then we are looking for a to negate this double top. Then let's look at individual counters. Wilmar, very fantastic result, but has been selling. So I suspect MT is a culprit. They have been trying to reduce state in Wilmar, and today we have a one white soldier. Very good sign, and this may be a chance for this counter to continue higher. And what we are looking for is that we are looking at Wilmar to recapture this 509 level as such that it suggests a potential change in trend. Because this is an opportunity for us to look out for before it goes to 509. So stay tuned. Of course, if this counter were to trade below 469, means that NSKI may not have finished their selling. They still want to reduce more stake. So because short-term traders may look to exit. Long-term traders, you probably have to wait for more sign for it before you can re-enter positions to do dollar cost averaging. Okay. Then Fortress Mineral, just to follow up what I analyzed last week, as as I mentioned last week, I bid farewell to my favorite counter of 2021 with this black candle because of the volume. I can see since there are some huge volume exit of this counter, and because I did caution that if the next day it closed below 745, look out, probably to get up. But the next day it did not really go below 745. It attempted to go down, but it managed to have a fight back to 815 thereabout. So that's a good sign. Okay, that's a good sign. But the only thing that I don't like is that the trading volume is very low. So I received questions asking me that, hey, is it time? Because what you have mentioned has actually came true. And then is it time for us to enter? Because since you mentioned that there's a white candle, means that there might be some chance for this counter to continue higher. So I stopped there, and then I say that, oh no, we are not looking at this white candle alone. Also, please do consider the volume. The volume is very light, so we have to wait and watch further. So then came the bomb on Friday where everybody sold down. So the big player also took the chance to sell off their Fortress Mineral, push the stocks all the way down to 695 before a small recovery. And today, we see another round of selling. Do take note that this 2 days of selling volume is not very high. No doubt the candles are very long. The thing here is that we do need to watch for support level at 605. And this is a very crucial support for Fortress Mineral. Now, looking at the daily chart, it seems to be A-OK. But one thing I don't like is that if I were to switch these stocks to the weekly chart, the weekly candle here is a shooting star, which is having a black candle confirmation, which I have a very huge concern how low the stocks is going to be. Okay. Now, of course, the best case scenario is that we want it to build something like that. So you can see here, it was a shooting star in the past, or seems to be very high, but it doesn't have black candle confirmation. No doubt that the next candle is a very black one, but the volume is declining, and the counter managed to hold at this level before there's some rebound. So we like to see something similar going forward to build such a base over around 605, and then a rebound were to happen to probably resume its trend, etc. So we're going to we got to see what's going to be for Fortress Mineral. Geoenergy, last week I mentioned I have a target of 245. It came very close. It went to 24 before the heavy sell down come in, and then the whole trend got disrupted with this. First, of course, this candle is very, very ugly, bearish, especially if you look at the volume. Today we see some reprieve. We have some buying pressure comes in, but the volume is very light. So going forward, I'm still very keen for everyone who look at this video to study the chart over here, to look forward for this kind of pattern where this counter, despite heavy selling, did not continue to go down lower, in fact form a base. Now I'm not saying that we should get in here. In fact, we should wait for this to happen, then we get in around here. So you can see the high volume, and then there's a surge there, and this is where we should be getting our hands, not a very nice word, dirty, or our hands into the action rather. So more observation for Geoenergy and Fortress Mineral, not to forget as well, could happen as what Union Gas had. So going forward, we shall take action when we see a very clear sign, right, going forward. Okay, so before I end off, I'd like to talk about two US counter. So we have Tesla. One very important candle pattern that we are looking for is that hammer come the bullish Harami. So tonight, if we can see a Tesla closing a very nice white candle like this to around 613 or 619, then we may see Tesla stage a very strong rebound. Elon Musk has been very active as ever, and of course it has created a very mixed signal for the market where we're not sure whether he's very bullish or he's very bearish. Seems like he's very into crypto. Many fear that he is not focusing more energy in his EV business. So this may create some, uncertainty, and then therefore market decided to sell down. So will market rebound on this signal? So we've got to watch. Next counter is AMD. Good result, strong results with a bullish Harami and hammer as well. So this could be a sign for rebound. So let's hope for the counter to have a white candle. If we can close $77 with a white candle, that will be very cool candle to have. And going forward, you have to come back to around 79.46 in order to start a trend changing event. Okay, so with this end the video. Hopefully you enjoy the sessions. I'll be back next week, and for the time being, stay safe and have a good week ahead.